should be able to talk.
Can they see the slides?
Yeah, they can see the slides.
Well, we have audio here. You're going to be able to see the slides. We just don't have a camera, on me, and that's probably better off here. So we're just going to get rolling here today. We got a supply demand report out. There really wasn't many surprises with it, but the one thing we do want to point out is that before that March planting intentions report, we said that tends to be the most volatile or one of the more volatile reports of the year. And then this April supply demand report, on that same scale, tends to be one of the least volatile reports. So here with this report, really the USDA projections were right about where the trade estimated everything at, with corn at 1.352 billion bushels, soybean carryout 120 million, and wheat at 852. On corn, you saw some minor changes in here as feed usage went up 50 million and ethanol went up 25 million bushels, and then exports went up 75 million. The bulls in the market are going to argue that exports need to be increased some more in here as China's been a big buyer. We'll see what the USDA does as we move ahead. On the bean side of it, there are some minor changes as exports got bumped up slightly, but residual dropped off and crush was down 10 million bushels. Bottom line is USDA from now through the early part of summer is going to keep old crop carryout around that 120 million bushels, which is pipeline minimum. We really don't have much to add in wheat as feed usage dropped off some. I guess I'm probably a little bit surprised by that. But when you looked at that stocks report, a slight increase in ending carryout was really justified. We did get some changes, though, on the world market. That's probably a little bit more significant. And I think you got to divide it up, even though we don't have it in this order on this chart, between the feed grains and the oil seeds. And on the feed grain side of it, both the corn and wheat ending carryout levels, dropped off. On corn, dropped off around 4 million metric ton, and wheat, dropped down about 5 to 6 million metric ton. And where that drawdown came from is we might have gotten the Argentina production down slightly, but the USDA really increased the world feed usage of both corn and wheat. What we need to remember is that wheat at that 295 million metric ton is still going to be the second largest on record. So, world wheat stocks aren't tight by any means, but this corn carryout levels have dropped off. With respect to beans, the increase in ending carryout all came from Brazil's bean crop up 2 million metric ton. Maybe it was a little bit higher than what people would have thought. But on the other hand, just with the estimates down there, it should have been bumped up a little bit. So to me, when you sum this whole thing up, this report is really just a non-event. Corn is about, a penny or so higher right now. Beans are down a dime when I walked in here to shoot this, and wheat was trading about 8 to 10 cents higher, but on weather. But I just want to look at a few charts here. This is going to be a short webinar. The big thing on May corn is we made new contract highs in here today. Okay, can that hold? We need to get the demand push, and we need a story to go along. And what I'm a little afraid of on corn is that the whole focus is going to go over to new crop. And when we look at a new crop December corn chart, what sticks out to us is today we went above $5. And right before we stepped in here, we were trading just below that mark. If we don't have weather issues showing up in here on the corn side of it, we could easily see this $5 area hold as some resistance. Now, we do put good support underneath the market. The gap area from the chart at 475 it is. So, we don't see a lot of downside potential, but this thing could really easily start trading sideways in here. If new crop D's corn is going to get a sustained move above 510, 520, we probably need some weather. When I get over to the bean side of it, sideways is just the best way to describe this bean market. Over the last, heck, you could even go almost over the last 3 months, beans have spent the majority of their time between, 1375 and 1425. The thing I think we need to recognize on old crop beans here is that with this chart, we had one close below the 50-day moving average, and there was no follow through and bounce right back up. Large specs are heavily net long soybeans, and if old crop breaks some trend line support, it could be a little more vulnerable than what we would think. And we got to remember with beans is that our supply situation in the U.S. might be extremely tight, but from a global perspective, the supply is actually getting a little bit larger. Okay, the bullishness on beans is really shifting from old crop to new crop. I'm taking a quick look then at the November soybean chart. I mean, we had the big rally after that March planting intentions report. I thought after that report, we'd have a decent chance of seeing $13 beans to try to secure the acres, okay? I mean, bottom line is beans need some acres. So to me, the trade here this last week is just a little bit disappointing on new crop beans. It's almost too early to trade on weather, and it seems like it's just kind of content sitting in here, in this 1270 range, give or take a dime. Good support is down in the 12 to 12 and a quarter area. I don't see us going below there until we know the crop's planted and we have acreage. On the other hand, where we're stalling out right now, an argument can be made, to get above 13 and a quarter, 13.50, we're probably going to need some weather. The most volatile market here this week is the wheat market. Today we got July Chicago wheat going above the 40, 50-day moving average. It went down and basically held $6. Can we push 6.70? I don't know if we can quite go that high or not. And the reason why on wheat, on Chicago wheat in particular, is that we're just not competitive on the world market. And if we're going to rally on wheat, it's going to go more with Minneapolis wheat, as that's where we have the dry weather conditions up to the northern plains. And that's what's pushed prices up near their contract highs. This rate here, September Minneapolis wheat, is the first true weather market that we are seeing, okay? And next week's trade will really determine whether this thing can break out or not. If we break out into new highs, look for another quick 30 to 50 cent push on September Minneapolis wheat. My bias is that the dry weather issues through the northern plains are severe enough right now that this market's going to be really sensitive to these weather forecasts that are coming up. If we come in here next week and they keep in a really dry forecast in, there's a good chance, we could break out in here on September Minneapolis wheat. In the big picture, though, wheat is struggling. U.S. wheat will struggle because we're not competitive on the world market. And the U.S. wheat market has rallied a lot faster this week than what the world has done. We're going to finish this thing up in here now, on just some final thoughts. I don't know if the USDA gave the bulls enough to really gas this old crop market higher. It needed the drawdown on corn carryout below 1.3 billion bushels, and on beans when they increased world carryout, it just wasn't quite enough. So I think what's happening here, and this is kind of confirming after that March 31st report, all the focus is going to be on new crop and new crop futures, okay? I think when it comes to old crop, if domestic users need grain, they're going to be doing their work on basis, not so much on the future side of it. So to me, the upside potential all comes towards new crop. This is the time of year where the focus is going to shift towards new crop. What we need to remember on the old crop basis, and this is just heading over the next couple of months, we're not the cheapest in the world anymore. We had a demand-led rally because we were cheap. That's not the case. I just want to reiterate that we got to watch Minneapolis wheat, okay? And whether if you're a corn farmer in the Midwest, I think that this wheat market and wheat fundamentals, we need to keep an eye on that because wheat is going to be used as feed or livestock feed around the world. The thing that sticks out to me, I guess, one thing today is, D's corn traded above $5, okay? If we close below $5 today and head into next week and this crop starts getting planted, okay, you could see that $5 area just kind of be the high water mark. My bias right now is the Midwest weather leans a little negative, okay? Having said that, though, to me, the northern plains weather for spring wheat could be a little more positive, and that's what's going to really keep this market two-sided and I think fairly volatile. We get some questions in here. One was on the stocks to usage. Does 9.2% stocks to usage justify May corn 580? I have to, off the top of my head, I don't have any notes with me here today. I'll have to get back and I'll write about it here tonight on tonight's report. I wish I know those figures right off the top of my head. I just don't have it. Great question. Basis is crazy strong. Now it's only going to get strong, or only going to strengthen. Trends are still up. I think when you're looking at the basis side of it, and I don't know where you're located at when asking these questions, but I think what's happening here on the basis is that the strengthened basis in the fall and winter, okay, came from the export market. With exports, especially on beans slowing down, and on corn, a lot of those bushels already bought, I think the strength of basis is going to get shifted back to the domestic market. So if there's good ethanol margins, ethanol and livestock feeders are going to be pushing the strong cash basis levels. The one thing we need to remember, though, is the markets move a lot on uncertainty, okay? And everyone knows that our stocks are relatively tight, so I think that the end users are being fairly proactive in getting their physical needs covered. Again, we like doing these when a report comes out. We'll be back on Tuesday, and I'll, like I said, if I get some more questions in here, we'll answer them on our report. Have a great day.